Right now, while you're watching this, nearly $4 billion has vanished from Bitcoin ETFs in November alone. BlackRock's flagship Bitcoin fund just watched $523 million walk out the door in a single day. But here's what nobody's telling you about this mass exodus and why the people making these moves might know something you don't. See, when money moves like this, it's never just about Bitcoin. There's always something deeper, a trigger, a pressure point. And if you look at what's been happening since October 1st, you'll start connecting dots that Wall Street doesn't want you connecting. Because this isn't really about crypto at all. Let me tell you what I found. November 2025 is now officially the worst month for Bitcoin ETF outflows in history. We're talking $3.79 billion pulled out. That breaks the previous record set back in February when Trump shocked markets with surprise tariffs. BlackRock's IBIT, the biggest Bitcoin fund on planet Earth, has hemorrhaged over $2 billion this month alone. Fidelity, Grayscale, and all the major players are watching billions evaporate. On November 21st, nearly $1 billion left in 24 hours, the second largest single-day outflow ever recorded. Now, most people see this headline and think Bitcoin is dying. They think crypto winter is here. But that's exactly what they want you to think. Because while retail investors are panic selling and financial media is writing obituaries, something else is happening in the shadows. And it starts with a government shutdown you probably didn't even notice. October 1st, 2025, the US government shuts down. It was the longest shutdown in history, lasting 43 days. And here's where things get interesting. When the government shuts down, the Bureau of Labor Statistics stops publishing data. No jobs reports, no inflation numbers, no retail sales data. The White House even admitted some October economic data might never be released at all. Think about that. The Federal Reserve is trying to make interest rate decisions while flying completely blind. But there's something they're not telling you. During this exact shutdown period, Bitcoin crashed from $126,000 to below $82,000. That is over a 40% drawdown. The correlation is too perfect to ignore. See, when government data stops flowing, market makers lose their compass. Without economic releases, institutional traders can't model risk properly. So, what do? They pull liquidity. They reduce positions. They wait. And here's the kicker. The Congressional Budget Office estimated this shutdown would shave up to 2 percentage points off fourth quarter GDP. That's massive, but nobody's talking about how this liquidity drain intentionally targeted risk assets like Bitcoin. Now, here's where the story gets really interesting. While all this panic is happening, while billions are flowing out of ETFs, smart money is doing something completely different. Look at the on-chain data. Wallets holding over 10,000 Bitcoin. The whales, the institutions, their accumulation score is heating up. They're buying heavily. The Abu Dhabi Investment Council, a sovereign wealth fund, tripled their Bitcoin position during the third quarter. They didn't reduce it. They tripled it to $520 million. MicroStrategy, led by Michael Saylor, keeps buying every dip. JP Morgan is accumulating. These aren't retail traders. These are the people who move markets, and they're loading up while everyone else is running for the exits. Why? Because they understand something critical that most people miss. ETF outflows don't mean Bitcoin is dying. They mean the nature of who holds Bitcoin is changing. And that change tells you everything about what's coming next. Let me explain what's really happening here. When regular investors buy Bitcoin through an ETF, they're basically tourists. They come in when prices are pumping. They leave at the first sign of trouble. That's human nature. But that money is weak money. It panics. What we're seeing right now is weak hands being shaken out. ETF redemptions are just retail investors capitulating after months of volatility, government chaos, and negative headlines. They bought at the top, and they're selling at the bottom. It is a classic mistake, but while they're selling, institutions are quietly moving Bitcoin off exchanges and into cold storage. Long-term holder wallets now control over $200 billion in Bitcoin. The realized cap for addresses holding Bitcoin for over 155 days just crossed $56 billion. These are the strong hands, the smart money. And here's what makes this absolutely critical for you. This is the pattern that happens before every major Bitcoin bull run. Distribution to accumulation, panic to conviction, retail to institutional. We saw this exact playbook in 2020 before Bitcoin went from $10,000 to $69,000. We saw it in 2016 before it ran from $650 to $20,000. The question isn't whether this will happen again. The question is whether you'll recognize the pattern before it's too late. But there's something else happening that most people are completely missing. And this is where it gets concerning. The Federal Reserve is trapped. Inflation is still elevated. The economy is weakening. They need to cut rates to stimulate growth, but they're worried about inflation resurging. And now, with the government shutdown creating a massive data blackout, they're making decisions in the dark. FedWatch shows only a 48.9% chance of a rate cut in December. That's down from nearly 90% just weeks ago. The uncertainty is killing market confidence, and when traditional markets are uncertain, risk assets like Bitcoin get crushed first. This is the squeeze play. The government shutdown wasn't just about budget politics. It created the perfect storm to flush out retail crypto investors, dry up liquidity, and allow institutional players to accumulate at lower prices. Whether intentional or not, the effect is the same. And here's what concerns me most. If the Fed doesn't cut rates in December, if economic data continues to disappoint, we could see Bitcoin test levels that make $82,000 look optimistic. Some analysts are warning of a drop back to $76,000 or even lower before this is over. But here's where this gets really interesting for you, because every major crash, every moment of maximum fear creates generational wealth transfer opportunities. Right now, the crypto fear and greed index is sitting at 16. Extreme fear. That's lower than it was during the COVID crash, lower than the FTX collapse. This is capitulation level fear. And what do you think happens when fear is maxed out and smart money is accumulating? Exactly. The next leg up begins. Look at what's happening with altcoins. While Bitcoin ETFs are bleeding, new XRP and Solana ETFs are seeing massive inflows. XRP pulled in $410 million. Solana grabbed over $300 million. Money isn't leaving crypto. It's rotating. It's repositioning for what comes next. Bitcoin dominance is rising. It's approaching the level that historically marks cycle tops. But here's the catch. Those cycle tops in Bitcoin dominance usually happen right before massive altcoin seasons. When Bitcoin consolidates and finds support, all that accumulated capital and attention floods into smaller assets. The people pulling money from Bitcoin ETFs right now aren't done with crypto. They're just being impatient, and that impatience is creating your opportunity. So what should you actually do with this information? Because information without action is just entertainment. First, understand that ETF outflows are a lagging indicator. By the time you see billions leaving, the institutions have already positioned themselves for the next move. They're using derivatives, buying spot off exchange, and accumulating through OTC desks where nobody can see them. Second, recognize that Bitcoin has entered a compression phase. Volatility is down to 2.1% daily, which is extremely low by crypto standards. When volatility compresses like this after a massive drawdown, it typically precedes explosive moves. Third, watch the macro triggers. The government is back open. Economic data will start flowing again in early December. The Fed will make their rate decision. Those are your catalysts. If rates get cut and data shows weakness, Bitcoin could rally hard as a hedge against continued currency debasement. And fourth, and this is crucial, don't try to time the bottom. Nobody can. But understand that when you see maximum fear, when everyone is calling for lower prices, when headlines are screaming doom, that's usually your signal not to go all in, but to start positioning. Dollar cost averaging into quality assets when everyone else is panicking has generated more wealth than any other strategy in history. Here's what I want you to take away from this. The Bitcoin ETF outflows are real. The pain is real. But the story behind the story is about a wealth transfer happening right now. It is moving from people who panic at headlines to people who understand patterns, from weak hands to strong hands, and from retail to institutions. You're watching the setup for what could be the next major Bitcoin rally. Whether that happens in weeks or months, I don't know, nobody does. But the pieces are moving into position. The government shutdown created the excuse. The fear created the opportunity. And smart money is accumulating while everyone else is distracted. The question is simple. Are you going to follow the panic and crowd out the exit? Or are you going to recognize this pattern for what it is? Because the people who win in this market aren't the ones who predict tops and bottoms. They're the ones who understand when fear is overdone and position accordingly. The next few months will separate the people who see headlines from the people who see patterns. Which one are you? If this breakdown changed how you view the current market chaos, please subscribe and like the video. We are analyzing the financial history and future trends that the mainstream media tries to bury. Stay informed and plant the seeds for your future. The next major insight is coming soon.